Ladies and gentlemen, welcome to this week's Thrive in China Roundtable. I'm very happy to have all of you here today. The topic of this week is around value-added tax in China. What is it? How do you use it? How can you optimize it? And how can you make sure that you are in compliance with the management of all of your Fapiaos? Before we start our weekly roundtable, this is specifically for the new ones to the community. How the roundtable works is that we're here to teach you. Sometimes we're going to ask you questions as well. The chat box will be your savior. So any questions you might have or comments you might have, please do insert them into the chat box. We will answer all of the questions and comments at the end of today's presentation during the Q&A. And just remember, this is 60 minutes of your value add. So there is no dumb question when it comes to China. We're using Zoom meetings, so if you run into any difficulties, just log off, log back in. If I run into any issues, it usually does take me about 1 to 2 minutes to reboot the system and to log back in again. I will be coming back in to finish off today's presentation. A little bit about myself, just as an introduction for those that might not know who I am. My name is Kristina Koehler-Coluccia. I'm the head of business advisory at Woodburn Accountants and Advisors. I have 17 years of on-the-ground experience in China, specifically in Shanghai, all around corporate services and compliance. And I work with over 500 companies on their market entry, their market implementation, as well as their growth in China. Overall, what we try to do is systemize our clients' operations in China in order to be able to then scale up as quickly as possible. If you haven't received our ebook, we have an ebook, which is the 10 biggest mistakes companies make in China. If you're interested in receiving a copy, you can just email me at kristina@woodburnglobal.com. Now let's get cracking on the operational aspects of the Chinese VAT tax and invoice Fapiao system. This is truly for newbies to the topic around VAT, and hopefully it'll give you some clarity on how you can operate in China as you're starting up. Now, what is value-added tax in China? Very simply, value-added tax is a sales tax in China. There will be VAT on purchases of goods and services, and there will be VAT on the sale of goods and services. It is a major source of tax revenue for the Chinese government. And as a consequence, there are some very bizarre ways of managing VAT. There are some very rigid and strict rules around VAT. And the goal and objective for everybody today is that we're not going to avoid paying VAT. We're just going to try and create structures that will optimize our operation and ultimately create VAT optimization within the structure. Now, in China, there are 2 different statuses as a company. When you register your company in China, you are going to receive a TIN number, which is basically kind of your identification of your company in China. This TIN number is written on your business license, but it is also registered with the tax bureau. And once you're registered with the tax bureau, you need to indicate to them what status you want for VAT. Do you want to be a small scale taxpayer, or do you want to be a general VAT taxpayer? The main difference between the two is that as a small scale taxpayer, you cannot offset the VAT that you make on purchases, whereas a general VAT taxpayer, you can offset or reclaim the VAT on purchases. Okay. Another difference between the two is that general VAT taxpayers need to declare their VAT payable on a monthly basis, whereas a small scale taxpayer, you only declare it on a quarterly basis. Now, the definition of a general VAT taxpayer, as I mentioned, is that the VAT payable on a monthly basis is the output, which is the VAT on sales of goods or services, minus the input, which is the VAT on purchases of goods or services, okay? Anybody who is a general VAT taxpayer will be able to issue VAT special invoices or VAT general invoices. Now, these are VAT Fapiaos fundamentally, but there are two different types of Fapiaos, the special Fapiao and the general Fapiao. Okay. And basically, when you issue a VAT Fapiao, meaning that you have made a sale of a good or service, you are issuing a VAT special Fapiao, the receiver of the goods or services has 180 days to verify and deduct that VAT special invoice, which will then be a deduction for them on purchase of goods or services. If any of this doesn't make sense to you, I'm trying to talk as slowly as possible so that people who aren't necessarily finance people understand what I'm referring to. Now, the current general VAT taxpayer rates are as follows on this table. And as you can see, the items in red are the rates since 2019. So on the sale of general goods, it's at 13%. If you are a service-oriented company, then the business supporting services is at 6%. Transport is at 9%. Logistics is at 6%. Yeah, so there we go. You have a list right there that you can review at a later stage. Now, when you are a small scale taxpayer, which is the status you will automatically be when you register your company, you will, again, as I reiterated earlier, not be able to reclaim or offset the VAT on purchases that you make. As a result, your VAT payable is the VAT that you declare when you are selling goods or services. Okay. Now, the VAT rate for small scale taxpayers is at 3%, regardless of the industry, sector, or whether you're selling a goods or a service. Okay. Now, as a small scale taxpayer, you can only issue VAT general invoices and not special VAT invoices. But it is important to note that you can apply for special VAT invoices at the tax bureau. Now, as a small scale taxpayer, as I mentioned earlier, you cannot deduct the VAT on any purchases whatsoever. All right. And prior to COVID, the regulation was that you could be, as a small scale taxpayer, tax VAT exempt if you had a monthly revenue of about 100,000 RMB or quarterly revenue of about 300,000 RMB. This has all increased since COVID, so I just want to highlight that here today. You can be VAT exempt as a small scale taxpayer if you've got a monthly revenue of 150,000 RMB or quarterly revenue of 450,000 RMB. Small scale taxpayers declare the VAT on a quarterly basis. They follow basically the profits tax deadlines, and they will then analyze whether they've hit the 450,000 mark in that quarter period to understand whether they will be VAT exempt or not. These are all policies that have been implemented because of COVID. And in theory, what has been written is that they will be revoked as of December 31st, 2022, which means, and I'll go back to the previous slide, we will go back to the old regulation of the mark of 100,000 RMB per month and 300,000 RMB per quarter, where you will then be VAT exempt. There are a variety of different Fapiaos. All right. And again, we're going very much to the basics so that people can understand really the idea of what the VAT system is and what the Fapiao system is. So in China, you've got two types of VATs, the general VAT Fapiao and the special VAT Fapiao. If you are a small scale taxpayer, you will have the ability to issue both of these invoices, both of these types of Fapiaos. The first one, though, that will come into play will be the general VAT Fapiao. And if you have customers who request, which most of the time they will request because they'll be general taxpayers, you can issue the special VAT Fapiao. In the past, you had to issue the special VAT Fapiaos directly at the tax bureau at the point when it was necessary. With COVID and now currently with the like call it the second lockdown, you are able to issue the special VAT Fapiaos either from your home if you're remote working or from your office You can do an application with your tax bureau and they will send them to you so that you have the ability to continue your business. And I will explain to you what is on all of these, what it looks like, etc. But I just want people to understand that Fapiaos in China are considered like gold. Each sheet of a Fapiao, of an invoice, of an official invoice, has a value on it. So there is a monetary value to each of these papers that are being given to you from the tax bureaus. If you do not issue Fapiaos and if you do not receive Fapiaos when you are transacting domestically in China, it does constitute and is considered an illegal act. And as a result of that, your bookkeeping in China is dictated by the Fapiaos that you receive from your purchases and the Fapiaos that you issue on your sales. And when you do your bookkeeping, it is the Fapiaos that are actually recorded. Whether you are then doing deductions because you're a small scale taxpayer or not, that's a separate issue. What is important to note is that these Fapiaos have a value to them. If you lose them, there is a penalty associated with it. And usually it's the value of every sheet. So if you are in the stage of 10,000 RMB per sheet, if you lose these Fapiaos, you are liable to cover that 10,000 RMB as a penalty. If you are in a higher category and each sheet is worth 100,000 RMB, you are liable up to 100,000 RMB in case you lose these sheets. In the past, prior to COVID, when you were registering your company, one of the first acts that was required when you did your tax registration was that a tax officer was going to come to your office to review whether you had a proper safe to be able to store the Fapiaos and that you had a corporate governance mechanism in place on how these Fapiaos were going to be used. So this is not a joke when I say all of this. We did a liquidation for a company in China where they had lost their Fapiaos. They had lost a booklet of 25 sheets and they were liable of up to 250,000 RMB. Couldn't even liquidate the company until that penalty was cleared out. Okay, so it is something that is considered serious. All of these Fapiaos are recorded into your VAT software system. And so the tax bureau knows if you are, because it goes in sequential numbers, if you have lost a sheet or not, and it can all be tracked. Okay, so it is vital that you have some form of corporate governance within your organization on how you are tracking the receipt of Fapiaos from suppliers and the issuance of Fapiaos from your own company. Now, special VAT Fapiaos are really the Fapiaos that are utilized on a day-to-day business in China, because these are the Fapiaos which allow you to do the deductions on purchases. There is a lot of information that has to go on these special VAT Fapiaos. And I've listed it here, but I would also like to show it to you physically so you can see what I mean. Now, you're going to have the buyer's information in there, the seller's information in there. You're going to have the descriptions of what you are selling, whether it's services or whether it's products. You're going to have then the VAT amounts, the price, the value of the product or service in there. And then you're going to have your invoice seal that is going to go on there as well. And you're also going to have your TIN number for both companies, which is the number that is your company registration. Now, we are all human. We all make typing errors. But if you make a typing error on a Fapiao, it will be considered as illegitimate. And you would have to go through a process of canceling it to then be able to reissue it. So this comes into Fapiao management. I'm going to give some tips to those of you that are new, but even those of you that are running businesses already in China, you might want to implement some of these tips if you have been noticing that there's a lot of human error occurring as you are issuing invoices. Okay. But I'll get to that at the end of the presentation. We're still going through the foundation of it all. Now, again, this section, most people think I'm joking about how this actually is operated in China. But when you establish your company in China, if you decide to become a general VAT taxpayer, you go through an application procedure, which in the past used to take weeks on end to get it. Now it usually just takes a couple of working days and you have your status. Once you get that status, you want to be able to buy a booklet of VAT Fapiaos. Let me go back to the previous slide, like this. So it's a booklet of these sheets so that you have the ability from your own office, or if you're working right now remotely, to be able to issue these Fapiaos. Okay, so that your business continues to run on a month-to-month basis, because the Fapiaos have to be issued in the right timing based on your payment terms, based on a lot of aspects in relation to how you're transacting with your clients and your suppliers. When you first set up your company, you're going to get a booklet where each sheet, so this one sheet here that you're looking at, has a value of up to 10,000 renminbi. Now, as you can see in this example, only 59 renminbi, 59.60 has been issued. Okay, 50 being the value of the product, 866 being the VAT amount. Now, you could issue up to 9,999 renminbi on that one sheet. Okay, so if you have a transaction with a client and the value is 26,000 renminbi, you're going to issue 3 sheets. First one being 9,999, second one being 9,999, and the third one being the remainder amount. Okay. When you are issuing these sheets, let me go back to the previous slide, just so you know, one sheet has 3 copies. So there's the white on the top, there's a red, I believe there's a blue, but don't keep me on that. I think it's a blue one. And the buyer gets a copy, the seller gets a copy, and a copy goes to the tax bureau. Okay. Now you have to imagine if you're doing a transaction of 1 million renminbi, you won't even be able to, the booklet is not even enough, right? So what do? You can always increase the quantity of Fapiaos on a month-to-month basis, but you need to show to the tax bureau that you have stability within your organization and you have consecutive months of 100,000 renminbi, consecutive months of revenue of 300,000 renminbi or above. Okay, and then you will be able to go to the next level where you will be able to issue a Fapiao worth 100,000 renminbi. Okay, so it does get complicated. They are doing it again because there is a black market in China regarding Fapiaos. So they're trying to control the issuance of these sheets. Okay. Now, if you have a special transaction that comes out of the blue, it's an abnormality, it's for a very large amount, you can go to your tax officer to apply for a special transactional situation, the Fapiaos that are amounting to that contract. Okay. This is why I say it's very, very important to have very good communication with your tax officer so that he can understand what type of transactions are running through the company, what are the value of those transactions, so that he can then help you to get the right level of Fapiaos that you need to be able to then purchase the right amount of booklets. Okay. I just want to emphasize here that I forgot to mention this earlier. You get 1 booklet per month as you're starting up in China. So per month, you get 1 booklet, 25 sheets, values up to 250,000 RMB. Again, you're going to have to show the amount of transactions that are rolling month to month to be able to then purchase a second booklet each month. Okay, so it's not just about the value on the sheets, it's also about how many booklets can you purchase from the tax bureau every month. Just briefly, I want to go through how VAT is imposed on transactions, and we're going to start off with trade transactions. So if you are a general VAT taxpayer, right, as I mentioned, you can deduct the VAT on purchases. So your VAT payable on a monthly basis is what you sell minus what you have purchased. Okay, it's a very similar concept in Europe. When you are importing into China, okay, you've got to understand that customs duty must be paid together with the input VAT. So the buyer of goods in China that is importing, the consignee of the goods, the importer of record of the goods, has to pay customs duty and input VAT, which is normally calculated on the CIF value of the product, to be able to release the goods into the market. Okay, so it's the Chinese buyer in China who is going to settle those amounts, and then it's a negotiation how you work out the fees related to that. All right, then obviously he might use that for production. He might then just continue to sell those finished products on, and he will then issue Fapiaos to the end customers with the appropriate VAT that is on there, obviously, hopefully with a margin on top, okay? Because you got to think about transfer pricing regulations. So it's just very important to understand that when you are importing, before the goods can even be released from customs, there is the customs duty and the input VAT that has to be settled. In terms of domestic transactions, it's very straightforward principle. You are buying goods or buying a service. There's VAT on there. Your supplier or third-party provider will be issuing an invoice to you. You record that into your VAT system. You're going to be selling services or selling goods. You record the issuance of those VAT invoices in your system, and month to month, you have your VAT payable. Very straightforward principle. When you are exporting, whoever is the exporter of record, so the last owner of the goods, so I call that the exporter of record, they can apply for a VAT rebate upon exportation, okay? And the VAT rebate rate will depend on the HS code of the product, and it will then be calculated on the original sales value that the exporter of record purchased it from, okay? VAT rate rebate should be done relatively swiftly from the date of exportation. Don't hang around. Don't think you can do it 1 year later. We know it's a very bureaucratic procedure to apply for these rebates. It is a pain, the amount of documentation that has to be submitted. Don't wait around for it. We have clients that actually hire people who simply do this function of VAT rebate applications on a month-to-month basis, because it's very important to get that capital back into your account to fund the operation, especially if you're doing a high volume value of exportation from China. So if you're running into these difficulties upon exportation, you know, you might want to find finance people that solely do this job of VAT rebate applications, because that is their day-to-day job. They know how to negotiate it. They know exactly what documents have to be submitted, so you're not waiting around. Why do I recommend that? It's purely from a cash flow perspective, not that you're sitting around waiting to do these types of applications. And the excuses from your finance team is we don't have time to do them, and they put it on the back burner, and then suddenly you don't have the ability to do it because you passed deadlines. So think about that investment. Obviously, for those of you that are small scale, or those of you that are, you know, just starting up your operations, this might not be critical. For those where the transactions are flowing relatively swiftly, that's something to think about of adding that headcount. VAT on service transactions, again, is very simple and very straightforward. When you are a service provider, and I'm going to use myself as an example, I don't have purchases, very minimal. I might be working with a variety of different third parties, but generally we do all of our service in-house. Occasionally we might use external parties to assist us in peak periods, but we don't really have input VAT in our system. And as a consequence, we as a service company make the decision to remain as a small scale taxpayer so that we can benefit from the 3%. Under COVID times, it's now 1%. VAT tax rate, and that's all we pay in terms of VAT. 1.5% if you account for the surtax. So whether you are trading in China, whether you're manufacturing in China, whether you're offering services in China, it is important to talk to your outsourced provider or your accountant to create simulations, because we want to be VAT optimized. I know that as soon as my company starts growing and I have more third parties that I'm collaborating with, it might make sense for me to upgrade my status to a general VAT taxpayer so I can optimize my VAT every single month, every single quarter. Okay. But I do these simulations. For me, I do it every 6 months. Other people I might recommend to do it every quarter period to really have an understanding whether they are optimizing their system. The same can be said for trading companies. If you start off your business as a small scale taxpayer and you don't have a lot of purchases because actually you're selling equipment directly from your HQ and all you are is a service center doing repairs, implementation, maybe a little bit of assembly, etc. It might be more beneficial for you to remain as a small scale taxpayer. So when you are incorporating your entity and you have actually finished your incorporation, do a simulation before you decide whether to go up to a general VAT taxpayer. I say that because you can never downgrade yourself. Once you're a general VAT taxpayer, you are a general VAT taxpayer for life. And my biggest belief is we want to optimize all of our structures. So even as a general VAT taxpayer, do simulations and forecasting in regards to what your VAT liability might be to understand how you can better optimize transactions from a quarterly period to a quarterly period. And then obviously looking at it on a 12-month basis for your fiscal year. But basically for service companies, in theory, similar to trading companies, your VAT payable is your output, what you issue as invoices to customers, minus your input, what you might have as third parties, if any, okay? I put in here the cost of purchasing materials. My purchasing of materials is stationary. That's what our materials are. So, however you might look at that in terms of your service sector. Now, invoicing options. A lot of people aren't aware that they have options, and you are absolutely not required to be fixed on choosing just one option. You actually have the flexibility to decide how you're going to invoice depending on customers and depending on the timing of the issuance of the Fapiaos. So I want to explain this to you. When you are a startup, my belief is the critical point is cash flow. We want to make sure that we have enough cash in the bank account to pay for our expenses, and it might not be your customers might not be responsible or reliable enough to pay your invoices on time, okay? During COVID, I was a bit lax on some clients because I was in a good cash flow standing, and I allowed some clients to not pay me for a 12-month period because I knew their situation. And this is why I don't issue my Fapiaos upfront. Now, what do I mean by this? Your options are the following. You can say to a customer, I'm going to issue the Fapiao immediately. I'm going to give it to you, the customer, and now you have to pay me. The question is, what are your payment terms? Are your payment terms immediate, within 14 days, within 30 days, within 60 days, 90 days, 180 days? What are your payment terms? Okay. But keep in mind, the minute that you issue that VAT Fapiao, you are VAT liable. It's gone into your VAT software system and been recorded, regardless of receiving any money from your customers. Now, what this can cause over a period of time is if your customers don't pay you on time, that you have an imbalance of cash flow because you're paying out the VAT payable without getting any income in. Okay. So as a startup, when cash is king and we want to be cash flow positive, my suggestion would be to tell your customers, I don't always know when you're going to pay me on time. You might not want to have that conversation with him, but in your mind, you're thinking, I don't really know when you're going to pay me or if you're going to pay me on time. So I'm going to issue a pro forma invoice. Okay. And this can be an Excel sheet, a Word document, whatever type of invoice. You pay me. And once I've received payment, I will issue immediately the Fapiao to you within 24, 48 hours, you will receive it. Okay. And that means when you issue the VAT Fapiao, you are recording it in the system, but you know that you have received the income and the VAT together it's not going to affect your cash flow. You're not paying anything upfront in terms of your VAT payable. Okay, so just remember, even as you are growing and as you're scaling up, if you have some customers that are not reliable or who you know are not paying you on time, you can have this separate system where you say, I'm going to issue you a pro forma invoice. When you pay me, I will issue the VAT copy. Now, of course, if you've got terms and conditions that are saying we don't give you the goods until payment received, or whatever the case is, fine. You know, in that case, you have the leverage to say, you know, if you don't give me the Fapiao, I'm not going to give you the goods. All right. If you're in the service sector, that might be a little bit trickier. Okay, because it's a bit hard to say, I'm not going to perform the service, especially in our sector, which is the accounting sector, where it's a rolling effect. We're not going to say to the client, we won't perform your services until you pay us, right? So it really comes down to the client, the customer, your payment terms, how you're negotiating the delivery of the goods or the delivery of the services and whatnot. But just know you have these two options. I have met a lot of people, a lot of friends who did not know that they could issue pro forma invoices first, wait for payment, and then issue the Fapiaos. And for a lot of small businesses in China, that actually saved them quite a bit in terms of cash flow. Now, Fapiaos can definitely confuse companies about cash or accrual accounting. And I want to explain this, okay? If you take the philosophy of the second step here, where I say issue a pro forma invoice and then we'll issue the Fapiao on the receipt of payment, that's cash accounting, okay? Because ultimately you're recording the Fapiao upon receipt of cash. If you take the other methodology of I'm going to issue the VAT invoice and wait for payment, well, you're issuing the VAT invoice at the point of where you are transacting and negotiating the deal. That is more like accrual accounting. Okay. Now, it does not mean that because you issue the pro forma invoice that you can't do accrual accounting. In many instances, accountants in China don't realize that there is an accrual methodology that you can do. They have not actually learned this within their accounting education, because they've learned everything, obviously, according to PRC GAAP, which is very much Fapiao oriented. I actually don't call the system in China cash or accrual accounting. I call it Fapiao accounting, because everything is dictated by the issuance and receipt of the Fapiaos. All right, that's your China books. If you are transacting with a high volume of purchases and sales, you might find difficulties in reading your P&L to understand what your current standing is today in regards to your business, because the timing of the Fapiaos received and the sales might not match. If you're a project-based company, right, you might find that the project, the income that you receive for the project is not properly allocated, is not allocated with your costs, because you're not getting the Fapiaos appropriately from your suppliers on time. This is where it leads to the concept of having a second set of books for China, an internal set of books. Now, in the past, 17 years ago, when I first arrived, we used to call these second set of books where you fudge the numbers. I'm not saying fudging the numbers. I'm saying we have to produce reports in China based on PRC GAAP. And sometimes, because of the Fapiao issuance and receipt, you might not have the ability to have a clear picture of your books. And if your accountant is not familiar with the right process of accrual accounting and doing those accrual applications with the tax bureau, which is what is required, it might be lost, okay? In that case, then you have the option of creating a second set of books, which is double the amount of work. I realize that, where you then have a proper accrual system where, you know, when the transaction is happening, you put it in the system. It's not related to Fapiaos or anything like that, or cash received or anything like that. It's actually based on the true reflection of the business, the project, on a month-to-month basis. So this is why I sometimes recommend clients to have a second set of books, because of the chaos in relation to the receipt and transfer of and also based on the education of the accountant they might have in the house. You might then want to switch accountants. That's up to you. That's an internal in-house decision that has to be made. If you've got any questions on this concept, don't hesitate to reach out and we can talk about that. Now, I want to talk about VAT Fapiao compliance and management because, again, you might not automatically hire an in-house accountant to manage this. You might use an outsourced provider where the outsourced provider is doing some functions and you are doing some functions. You might have an in-house accountant, but they are a junior accountant or they're a cashier. And so you can't really trust them necessarily. Trust might not be the right word. They're so new, you might not really want to give them the corporate governance to put in place policies around VAT compliance and VAT management. All right. So I just want to give a couple of tips around this. Now, there's been tremendous reform over the last 17 years around VAT, previously, if you guys ever did your own research on Google, you would have heard of business tax. Business tax used to be the tax imposed on service companies that has been completely revoked. And now everything is within this VAT system. Now, the VAT system has improved a lot over the years. It is still a very old-fashioned concept, though, which is followed by very rigid rules and regulations around it. Now, as I mentioned earlier, you have your Fapiao sheet where you need to have the buyer's information, the seller's information. You need to have the description of what you're selling within the Fapiao. And I did highlight that there is human error, okay? You need to put into the system the buyer information, the seller information, which is going to be you. And usually that's fixed once it's input once, but the buyer information, you can make human mistakes. Now, what we have found is if your sales manager is talking to the other sales manager or the buyer, the merchandiser, whomever, right? They don't know these finance issues, but you might have given them the responsibility to get all of the details. And this is where the first step of human error arises. Okay? Don't have your salespeople talk about what needs to be on a Fapiao. It should be your finance person talking to their finance person about this. Number two, when you have once you've got a client and it's in the system and it's properly in the system, it's recurring. So there's no issues around that unless they make changes, which you should be aware of if they make changes to any of the information, company address, etc. When you get new clients, always make sure the finance people are talking to the finance people. But what you should also do is if you've got a transaction of 55,000 RMB, you're going to issue 6 sheets of Fapiao, each sheet with the value of up to 10,000 RMB. Only issue 1 sheet, not all 6. Issue only 1. Ask your client to verify it, i.e. the finance person, right, in your client's office, to verify that the data and the content is correct before you then issue all of the other 5 sheets. The reason why I say that is because it is much more complicated to cancel 6 sheets of Fapiao versus just canceling 1. Okay, and it is a much speedier process as well with your tax officer to cancel it. When you are issuing also VAT invoices, you should probably have a cutoff date of around the 25th, 26th of the month in case cancellation has to happen. What you want to do is make sure that you are canceling invoices in the month that they have been issued. If you start canceling them in the following month, it's all chaos because it throws off the complete VAT payable as a general VAT taxpayer on a month-to-month basis. So when you issue the VAT invoices and you've got a new client, make sure you do it prior to the 25th, 26th, that they can do their internal verification before you issue the rest of the invoices. You know it's correct and no cancellation has to happen. This just goes into the actual physical operation of the business, efficiencies, and not having to have lengthy discussions with your tax officers about human error that most likely will happen. I will just make a suggestion. If the human error is consistent and consistently happens, think about changing your accountant or whoever is doing that, because it can get very tedious. All right. There is also now the use of tax classification codes for goods and services. Again, have a talk with your tax officer about these classifications, that you are using the right ones for your specific goods and services. This is again why I say open dialogue, open communication with your tax officer to make sure you're doing the right things on your VAT Fapiaos and VAT invoices. Last but not least, I do want to announce e-invoices, e-Fapiaos, which is where we are heading to now. E-Fapiaos have been launched in Shanghai and a couple of other tier 1, if not tier 2 cities. Not for every single industry and every single sector. It really started off predominantly with restaurants, and now has been expanded into other areas. I have still a lot of problems and questions in regards to eFapiao, so I'm just going to mention it from why we haven't transferred ourselves into that system. There are still a lot of open-ended issues with the tax bureaus, in my opinion, in regards to eFapiaos, in regards to the recordings of the eFapiaos. And because we do the accounts for our clients in terms of recording those eFapiaos that we would issue to our clients in their books, that I am still waiting for things to settle and that for the operational regulations to get more stable. There are too many questions that I raise with the tax officers where they just don't know the answers themselves yet. And this just does not make it efficient for me to do the switch. We will all eventually get into a world of eFapiaos. So that is why I am mentioning it here today, where it is a very similar concept. You will have a value on a sheet. It's just you won't have the physical sheets any longer. You'll be able to issue these eFapiaos directly from your VAT software system, which will be wonderful. I think it will be a great initiative to start. It will be moving more into a modern world where your ERP system can then be connected to your VAT system as well to issue these eFapiaos directly from your ERP system. I think that's all the direction we're going into. It just might take a couple more years for it to really become stable and for it then to also be unified throughout China. So just so you know, if I in Shanghai am issuing an eFapiao right now to a client in Wuxi doesn't have eFapiaos, I cannot issue the eFapiao to them. So it would also mean that I can only issue eFapiaos to clients in Shanghai and not to then clients anywhere else yet. So again, I'm waiting for it to become all unified throughout China to make my life easier and to make our life a little bit more efficient. TIN numbers have to be included. So, you know, I've been highlighting a lot about the content that has to be on the Fapiaos. Obviously, the TIN number, which is your company registration number, has to be on them. If it's not on there, then the invoice is considered invalid. The other thing I want to mention is tax audits. And I'll be going into this topic in greater detail next week. There is a greater frequency of tax audits in China in relation to VAT invoice compliance, meaning that people are losing Fapiaos. There's too much human error as people are issuing Fapiaos, hence there's a lot of cancellations of Fapiaos. There's misuse of Fapiaos, and I'll get into that also when we look at allowances and expenses for staff members, employees, that the tax audits are becoming more and more frequent. It is very important that you have internal corporate governance around your VAT invoices, your VAT compliance, and who is in charge of all of that. We want to avoid tax audits. I have actually gone through a tax audit myself. Nothing was actually, the outcome was a success, but I can tell you the stress of going through it was not fun. The preparation of documents we had to go through and the meetings we had to go through with our tax officer. You're just worried. You know you've not done anything wrong, but you just don't know what they're going to find, and you don't know what you don't know, right? So as a foreigner in China, you think you're doing everything above board, which in the end we found we were, but during that period, you're just not sure, you have doubt. And it can be a very stressful period. So you do want to try and avoid as much as possible tax audits. What helped us to survive the tax audit that we went through was the fact that we had standard operating procedures written down and in place where the tax officer could ultimately see how we operate internally with all aspects in relation to our taxes. So how we issue VAT invoices, when we issue VAT invoices, it was all in these standard operating procedures. And they could also see that every single staff member knew our policies and knew what we were doing, and that helped a lot. We had to make minor amendments on those, but we had no issues otherwise in terms of the taxes. So if there's one thing I want people to take away from here is if you don't have standard operating procedures in place in terms of how you transact, the terms and conditions of how you transact. So for example, how you give discounts, how you might change prices, who maintains the Fapiaos in the office, where are they maintained, who is allowed to be able to take them out and issue them, who is responsible for the VAT software system, who inputs the data into the VAT software system. If you have that in place, going through a tax audit is going to make your life a lot easier. I can say that. So just briefly on tax audits, why would you get a tax audit? You might get a tax audit because you are reported to the tax authorities by somebody who denounces you. So that could be anybody, an internal employee, a whistleblower, could be a supplier, could be a customer, could be a third party, could be whomever wants to make harm to you, okay? The minute that the tax authority gets a notification like that, they must investigate. Scenario 2 is around red flags in your financial reports. So you have your VAT declarations on a monthly or quarterly basis. You've got your profits tax declarations where the tax bureau will review, they're going to pick names out of a hat, where they will review your balance sheets, your financial statements, your P&Ls and whatnot. And if they see that either your company is not healthy, or if they see that, which was our case, in our industry, we are doing better than the norm, they will start looking in greater detail. So even if you're doing better than your competitors, doing actually even worse than your competitors, these can all be red flags, suspicions. If you are doing tremendous overseas transactions, repatriating money out, that can be a red flag, okay? Our scenario for our own tax audit was the red flag from the tax bureau. Scenario 3 is when you're applying for a tax refund. So, the tax bureaus don't want to give you money back. They definitely don't want to give you their tax funds back. They will wonder why you're applying for tax refunds. Now, tax refunds are not as common as they used to be. Generally now, if you've overpaid, you would get a tax credit, and it would be automatically detected within the system. But if for whatever reason you're doing a separate application for a tax refund, they will investigate you. So analyze why you're doing that application. Scenario 4 is obviously liquidation. If you do a liquidation, the liquidation itself, just the tax component audit can take anywhere between 9 to 12 months because they look at the 3 previous years of operation to make sure that you have no outstanding tax liabilities, that you have all VAT Fapiaos readily available, and they do a complete audit and review of the last 3 years of your operation. So it's another form of tax audit. Again, I'm going to go through those 4 in much greater detail in next week's session. So if you're interested in looking at that, come join next week's roundtable. Now, I just do want to highlight common expense fraud schemes involving Fapiaos in China, which obviously stem predominantly from employees. Okay, so what can employees do? The first is very simple, fake Fapiaos. There is a black market around Fapiaos. All Fapiaos can be validated through the online tax bureau system. So what we do internally as well as for our clients is we validate every single Fapiao, which I know sounds completely old-fashioned and a lot of work, but this is how you know that you don't have fake Fapiaos. Just to give you a story, we had a client who had Westerners on staff, foreign employees. They were able to obtain allowances in terms of housing allowance and a couple of other things. And they submitted, apparently without knowing, fake Fapiaos from their landlords. It wasn't found out for quite a long period of time until suddenly the accountant said, I just want to validate, which is actually a very quick step to do, but you have to go by each Fapiao number, and realized it was fake. So they had actually been declaring fake Fapiaos. They had to go through, they actually went to the tax bureau to announce it. They didn't want to get into any trouble. So they denounced themselves, I guess you could say. But it's important to validate your Fapiaos and make sure that they are authentic and real, especially when your employees are have freedom with allowances or expenses or whatever. Different expense by nature. Now, for example, I have staff members who want to get around Shanghai very quickly, so they take the motorcycle taxis. These guys don't give you Fapiaos, but you still pay between 2, 5, maybe 7 RMB for a ride, depending on how long it is, and you don't get the Fapiao. Now, in this scenario, I'm not fussy. I will just tell my employee, you can take another Fapiao, which will obviously be a different expense by nature. But I do want you to get refunded, but I do need a Fapiao to book, okay? I cannot book anything without Fapiaos. I can't reimburse staff without having Fapiaos, okay? So it's up to you, again, your internal policy, what your corporate governance is around that. Inflated expenses is, again, something that you should watch out for. How are your employees inflating their expenses if they aren't? You know, ultimately, my rule of thumb is, again, I cater to companies that might not have HR departments who might do this, or they don't have finance departments where they will have staff who have the ability to check all of these details. The question is, you let it go for one, you then grow, you have 5, you let it go for all 5, then you grow and suddenly you're 25, and you let it go and you have 25 employees. And you realize over time that in your general administration expenses, the highest line item are your employees' expenses. And you're wondering why. You've got to crack it at the beginning to be very stern and to have these policies in place from day one that none of this can happen. And you do need people to check this. All right. Canceled expenses is something that always catches my eye. If somebody submits something to me and then they come back and they say, oh, no, I have to take XYZ out, right? Watch out for that. It doesn't happen too often, but it does happen. Expense splits. So for example, let's say you go to a restaurant and you have a team lunch and 2 people are paying the bill. So 2 team members are paying the bill. And they're saying, yeah, I paid 50% and the other guy paid 50%. Could be that actually the one person paid the entire bill and the other person is just asking for a refund, but they were able to persuade the restaurant to give 2 Fapiaos. So be wary of these expense splits. Substituted Fapiaos, again, that's a little bit by different expense by nature. It's you're substituting Fapiaos for other activities and other forms of expenses. Fabricated business-related expenses. So for example, your team member goes on a business trip, says they had a dinner with a client, but never had that dinner, and now they're getting reimbursed for their dinner, which is not an allowance that they're allowed to have. So it's basically creating fake business-related expenses, okay? This is, again, where every employee who has expenses should be creating a cover sheet on what their expenses are. And ideally, you should be having an overview how the expenses are month to month. It could obviously change based on the number of business trips they have, but you should have an understanding of whether things are being faked or not over time, right? Expenses that are not self-initiated, what this basically means is that your staff member has an expense, but is not asking for the reimbursement right there and then. And they do it then 2 or 3 months later. Again, this is all about corporate governance. You should not allow that to happen. If an employee has an expense and they don't give you that Fapiao in that month that it occurred, they cannot get the reimbursement. There should be no exceptions, because you never know then how to track and know if something is being faked or not. Okay, so again, around the whole employee aspects and expenses, I know it's tedious and I know it's a lot of work, but you do want to have people who validate Fapiaos and also can verify the expenses that are being generated by the employees. Remember, you might not necessarily be in China to verify this. So somebody should do it for you, right? Now, I'm going to finish off today's presentation with communication. I preach communication in China. People don't do it enough. They either don't do enough communication between the headquarters and the China office, or they very simply don't do enough communication within the China office at all. Communication is vital for your business to scale. And if you don't communicate properly with your tax officer, if you don't communicate properly with a variety of different people, you're not going to scale up, okay? 17 years ago, when I arrived in China, I had the mindset of I can't reveal too much to too many people about what we're doing in China. Biggest mistake ever. Biggest mistake ever. I should have told people what our goal and objective was, to hear then what their feedback was in terms of growing and scaling up. So when you are communicating with your tax officer, do not be shy. Even as a foreigner, you're welcome to go to the tax bureau. Maybe not now during the lockdown, but eventually you will be able to go. Meet your designated tax officer. See what he or she looks like. See where they sit. Look at the office. It gives you a complete understanding of how old-fashioned the system is, okay? And don't be shy. Go with somebody who's in charge of it, and it's just purely an introductory meeting. At that point, once you've met them, you know that you know who they are. They're usually tied to your company. There very rarely are there adjustments. Usually they will be tied for your company for quite a while. But you know at that point that you can have an open dialogue and communication with them. And again, we are here to optimize our structures, but how can you optimize your structure if you don't know what you're allowed, not allowed to do? Okay. So a lot of that comes from your finance person, to have that open dialogue with the tax officer, to ask the appropriate questions, to ask things like, we need to have higher value Fapiaos to be able to operate. We need to create, we have a special transaction coming up. We need to issue special VAT invoices, but don't do this at the moment that it happens. It's never going to happen overnight. You need to have this dialogue ahead of time with your tax officer so that they can prepare, you can prepare, because there's always going to be applications that are involved. But you need to have that open dialogue and that communication. Treat Fapiaos with respect. This is not a toy. Like I said, if you have a booklet, 25 sheets, each sheet value is 10,000 RMB. You lose that booklet, it's a 250,000 RMB penalty. Not something I would want to hit my P&L. Okay, so know who's storing it, know who's handling them, have a standard operating procedure around the use of the Fapiaos. Again, I know there's human error, but try and be precise with data and information on the invoices, have customers approve them before sending them out. I would really recommend that tip, especially with new customers that you might be gaining in China. So there's not so many people that are on here today, so I don't really know if we can have a proper debate around this question. But I do like to finish off the roundtables always with the question of how can we optimize our VAT situation? Simulations for me are key. I do simulations on my VAT status every 6 months. I highly recommend that companies start implementing simulations ahead of time, so that they can forecast what their VAT liabilities might be, whether they're a general VAT taxpayer or small scale taxpayer. So for me, the VAT simulations are very, very helpful. Also helps a lot with cash flow. So you can understand, you know, when the tax bureau is going to deduct from your account and that it's not a surprise in terms of how much it's actually going to be. So, you can do these simulations on a monthly basis for the next month, however you want to operate with your accountant to do it. But you can optimize your VAT situation. You forecast your whole P&L. You can just forecast your VAT component, since that is something that will come out of your bank account almost every month if you're a general VAT taxpayer. So just to finish off today, how you can work with me, we provide a variety of services around administration, incorporation, and then we also offer the full outsourcing solutions for accounting, tax, payroll, compliance, VAT simulations, and that type of thing. So if you've got any questions around that, don't hesitate to reach out. You can email me at Kristina@woodburnglobal.com. And just to finish off, again, these are weekly roundtables. Thrive in China. At the moment, we're not getting full capacity of all of our community. Right now, there's the remote lockdowns in China, and there's also the war that is currently impacting a lot of people's thoughts and the safety of their headquarters and their businesses globally. So we're not getting a lot of feedback on that, but you can always watch these recordings on replay. So if you do join up to the community, you'll always get the recording. And we see it, or we watch it, or watch it me. Just to give you an update of the next roundtables, next week is about tax audit. April 6th, I'm going to be talking about implementing internal control systems within your organization, so standard operating procedures. Then we're talking about profit repatriation strategies, how to start your business with your China accountant. But even if you do have a business in China, it's just I give you a full checklist of what your Chinese accountant should be doing. So even if you do have your own finance team, that might be useful for you to check again if your accountants are doing all of those job functions. And also for the newbies, April 27th, we're going to be talking about writing a business plan in China and how to get your business up and running strategically, and how to then create these business plans on an annual basis. So I hope the video has helped today. The roundtable has helped. And again, don't hesitate to reach out if you've got any questions. Thank you, everyone. Take care and goodbye.